Good morning, hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our live feed and we'll have your questions addressed by our technical expert. But before bringing our guests on board, let's see what the global handover looks like. A Russian-made missile strikes NATO member Poland late Tuesday, killing 2 civilians. Polish President Andrzej Duda terms it as an isolated incident, says his government doesn't yet know who fired the Russian-made missile. The North Atlantic Alliance is on standby, Duda has added. Meanwhile, a cooler-than-expected producer price report soothes inflation fears and boosts U.S. stocks as equities saw after Russian-made missiles hit NATO member Poland. Meanwhile, Asian markets slip as investors watch developments at the G20 summit and await more details on reports of Russian missiles in Polish territory. The SGX Nifty also indicates a mildly lower start for the Indian market. Back home, will LIC stock price recover as the insurance behemoth regains market share? Paytm, Nykaa and BEL also in the stock spotlight today. Okay, let's get cracking and bring on board the first guest on the show. Shivangi Sarda is here from Motilal Oswal to talk technicals with us. Morning, Shivangi. Great to have you on board. Talk to us about the trade setup and what are you picking up for the day as far as Indian markets are concerned? Clearly, geopolitical news looks like is going to dominate the flavor. But back home, what kind of an open or what kind of a session should we brace ourselves for?
Good morning, Karunya. Thank you for having me on the show. So we've seen that, despite the weak global sentiments yesterday, we saw buying interest and the index touched a new 52-week high levels as far as Nifty is concerned. Even, the long-short ratio has improved and which indicates that, there is increased participation. But somewhere, today's session is going to be an important point over here because of the global sentiments that has cropped up. But as far as the setup is concerned, the index is quite positive and we can expect, higher zones over here. The way it is taking support is quite remarkable. And, the last hour of the session yesterday, we saw that, the gush of buying interest. So that is something which is very positive, and a hold of, 18,350 from this levels onwards would take the index higher to 18,500 and 18,600, whereas the supports are placed at 18,250 and 18,188 levels. As far as Bank Nifty is concerned, we've seen that, heavyweights have been moving quite well. And we've, even after, the slight weakness in the, previous session, we saw like a very good run up yesterday, and it touched its lifetime high levels of 42,450 levels. So overall, the index is quite positive, charged up by the bulls movement. Even India VIX is at its 61-week low levels, which indicates that, somewhere there is total comfort to the bulls. So that is something to watch out for. Now, if it holds above 42,250, it can move up. Yes.
Okay, well, that's interesting. Let's also talk about some individual stocks that could be in the limelight on back of news flow. The first one I want to bring up is Bharat Electronics. Now, they have inked an MOU with Yantra India. Now, this is going to be for cooperation in ammunition hardware, military-grade components, and at the same time, there's another MOU or a memorandum of understanding that they've signed with a US-based company called Profense, and this is going to be for manufacturing and marketing of lighter weapons. Now, interesting updates and partnerships coming in here for BEL. Talk to us about the technicals. Last few weeks, we're seeing some build-up in momentum. Can it meaningfully sustain that up move?
So looking at the chart structure of BEL, we've seen that, weekly it is holding its 50 exponential weekly average, which is quite positive. And daily it took support, near 104, 105 levels and has started moving up. So overall structure is quite positive, and we could look for an upside of around 111 levels over here with a support of 105.
Okay, all right. Now, there are two stocks that I want to flag off. Again, recently listed, not very long ago. They were big players, big stocks in the spotlight all of last year as well, Nykaa and Paytm. There's been some news development. Let me read that out to our viewers first, and then we can talk about the technicals. First up is Nykaa. There has been some bulk deal action that has taken place on this counter. Siganti India Mauritius has offloaded close to 33.7 lakh shares in the company for close to 200 rupees. Hermes Investment Fund has bought close to 26 lakh rupees at the same time for 198.5 rupees a piece. So on back of this fund action, possibly the stock could be in focus today. We don't have too much of historic trend as far as the technicals are concerned for Nykaa, Shivangi. I understand that. But can you foresee anything over the near to medium term that you can share with our viewers on this particular counter?
See, Nykaa took a very, good support at 160 zones and it started moving upwards. So it has just picked up momentum. But, yesterday we saw that it could not sustain at higher zones and it gave up its gains of the last two sessions. So somewhere, the stock is quite volatile. It has not been able to sustain at higher zones. So here it would be important to look out for, 180 zones. If it holds these levels, then the stock will, gain momentum again. As far as do you want me to talk about Paytm?
Yes, Paytm as well, but let me just flag it off as far as the news development is concerned. It's going to be released from pre-IPO lock-in this week, and that's the reason why we want to discuss the stock. And close to 86% shareholding will be released from this pre-IPO lock-in. The likes of Antifin Holdings, Alibaba.com, Berkshire Hathaway, Elevation Capital, SAF Funds, all of these big names will be eligible to sell their holdings in Paytm. In fact, even the founder of the company, Vijay Shekhar Sharma, will be eligible to offload his 8.9% stake that he holds in the company. So, this is the reason why we wanted to flag off this stock, Shivangi. Technically speaking, how does it look?
So technically, 620 has been a very important support over here in this stock. Even if we look at, back in June, these levels were quite supported and, the prices were seen bouncing off from these support zones. Even we saw these levels holding in September as well as in October. So right now, the stock is at those levels. So right now, it is very important to look at 620 zones. Now, if it holds 620, to around 640 levels. So 620, if it holds, it's a buy for 640 zones.
Okay, all right. That's heartening to know. Shivangi, request you to stay on with us. I want to also touch base with my colleague Neha Dave from MC Pro to talk about another company that got listed last year amid much fanfare, and that's the stock of LIC. Neha, thanks for joining in and good morning to you. Talk to us about LIC and the way or the life that the stock has seen, the company has seen post-listing. There has been a lot of turbulence last 1 year, but if we look at the recent developments and the recent numbers that they've posted, healthy top line, good gains as far as the market share is concerned. So are there enough triggers in place for the stock to build up from here on, from these current levels?
Yeah, so LIC has significantly underperformed the post-listing last year, and but if we go by the current earnings, it was very encouraging and very, very positive earnings, which was reported by the insurance giant. Now, in the earnings, obviously, the eye-catching number was the profit number. There was a tenfold increase in the profit, but profit is never a right metric to look at for insurance companies. It's not a right yardstick to assess them. The more relevant assessment can be done through looking at the top line growth of the company, which in insurance, we look at APE, that is annualized premium equivalent. Now, LIC's APE growth was robust. It was much higher than the three listed private players. And this indicates that LIC is gaining market share. LIC's performance in H1 FY23, that is the first half of this financial year, has been phenomenally well. The operational performance was very good. The margins have improved. They are doing the right things in terms of product mix. They launched some 3 products in the quarter, and all these 3 products were in the non-participating segment, which is the segment which LIC wants to focus incrementally going forward. Now, operationally, everything is in place. However, if we look at the valuation of the company, it is still very low as compared to the private players. It is more than a 50% discount in terms of valuation to compare to the players. Now, whether this valuation can go up, certainly, there are two aspects to it. One is, let me just explain a little bit on valuation. Life insurance companies are valued on embedded value basis. Now, in the current results, we have seen that embedded value hasn't moved much for LIC at all. And it is likely not to move considering the huge base it has. So then what will drive the stock upside? The important thing investors need to understand is that if the current performance is sustained, that is, if LIC continues to grow its top line much ahead of its private players, and if there is change in product mix, high margin products, grows faster. So if that is sustained, the valuation multiple which is assigned to the embedded value can certainly re-rate over a period of time, and that will drive the stock upside. So certainly, so to summarize, the overall performance was very good. The stock can get re-rated over a period of time if the performance is sustained. Investors probably would wait for a couple of more quarters to see if the performance is sustained in terms of top line growth and in terms of margins improvement.
Okay, all right. But you talked about how the company is undervalued right now. But could there be any further downside risks to that as well going forward? Or has the market priced in all the big concerns as far as LIC is concerned? And it only could go up from here. Has it hit the bottom?
Yeah, so if I have to say in terms of valuation, and the valuation is at 0.8 times the embedded value as of September. Now, this is in comparison to the private players, which are all trading about 2 times embedded value. So there is a significant discount. And this prices in most of the concerns, like the concerns ranging from the potential government interference, slow technology adoption, stiff competition from private players, lower VNB margins. All this is in the price, so which means that the risk reward for LIC is very favorable. At the current market price, the stock can definitely go down if there are sectoral concerns, if for the insurance as a whole, if the premium growth slows down significantly. However, the upside potential is much higher considering the sector is highly underpenetrated and there is a huge growth potential. LIC is gaining and recouping the market share from the private players. So risk reward is extremely favorable. Current valuation prices in the most concerns about the company.
Okay, so if there was any time to buy LIC, perhaps now could be it, guys, in case you're still looking at mulling over buying or investing in this particular counter. Neha, what about the overall scenario playing out for insurance sector right now? Apart from LIC, of course, there are a lot of private players which have underperformed as well last 1 year, and they continue to languish. So talk to us about the way forward for the industry, and is insurance at all a good area, good space to be in right now, or should one steer clear till there is some visibility of things picking up?
Yes, so insurance is definitely the area where which investors should consider for a long-term investment, and the reason are very well known. In terms of the market, which is highly underpenetrated, there is a huge protection gap in India, and it's a structural growth story. Having said that, insurance industry investors should not expect a quarter-on-quarter significant improvement in numbers, and the numbers will gradually improve over a period of time. So this is a sector where investors should invest in a staggered fashion. So if we talk about the private players, they have all the 3 listed private players, the leading ones, HDFC Life, ICICI Prudential, SBI Life have done well. But if investors is looking from an investment perspective currently, HDFC Life is trading at a very premium valuation. Though it's a great company and a very good set of numbers, the market price is something, is something that is pricing in all the positives. So investors would be better off considering SBI Life, which has the cost leadership in the industry. It has the lowest expense ratio in the industry, and it is doing well in terms of the growth also. So SBI Life is something that is that investors can keep on their radar. ICICI Prudential is also doing a lot of right things in the last 4 or 5 years. That said, the growth is missing in ICICI Prudential, and once the growth picks up, this is the stock which can get re-rated. So that also investors can keep on their radar, apart from LIC. Yeah.
Okay, all right, Neha. Great chatting with you and getting in your perspective on the insurance space with a special focus on LIC. I'm sure a lot of our viewers are interested in knowing more about the counter, and they can go on to MC Pro website to get in a detailed analysis on this particular stock. Okay, back to technicals then. Shivangi is standing by, so let's take it across to her. Shivangi, lots of queries lined up for you today. First up is one from Hari Krishnan. He wants your advice on Exide. Of course, last 1 month, we've seen a healthy momentum build up in the overall, broader markets. Exide also saw and also mirrored that uptake. Last 2 days as well, it has seen a good up move. Talk to us about the way forward here, because, battery stocks, again, haven't done too much over the last few months or the entire year, especially when auto stocks were firing away. Battery was a clear laggard. So talk to us about Exide and where it's headed.
Exide, if we look at the weekly frame, it is absolutely looking very nice on the setup wise. If we talk about the pattern wise, and daily it has come out of its range. It gave a breakout, and even after the breakout, we can see follow up buying in the higher zone. So overall, the stock is quite positive. Even a slight weakness that we saw was covered up the next session. And there is bulls in charge at the stock. So I believe, the stock could move up to 188, 200 zones, and we could place a stop at 177.
Okay, all right. The next query I want to flag off is from Suryakanta Mahapatra. He wants your advice on Ambuja Cements. How is that one looking?
So looking at the entire cement space, it has been quite a lot of action and interest. Ambuja Cement specifically has been one stock which has rallied from the month of August, and it has not stopped. So definitely the stock is very positive. There is quite a lot of momentum here, and the thing is that the resistance was faced at 585 zones in the month of around September. So that is a stock is near those levels, so that will be one level to watch out for. If it holds these levels, then we could see higher upside of around 608 levels with a stop loss of around 574.
Okay, all right. The next query is from Basavaraj Bhima Reddy. He wants to know if L&T Finance is a good bet for the long term. Now, this one also has seen a fair share of troubles this year, but again has rebounded a fair bit from its 52-week low, right now close to 83 rupees. Talk to us about L&T and the way forward.
So, looking at this chart structure, it took support near 72 zones, and then it rallied up to, 83 from those levels. So right now, a lot of, if we look at the longer term perspective, the support-based buying has been done. So right now, if we enter into the stock, the risk reward might not be as favorable as 2-3 weeks back. So definitely the stock is positive. There is positive momentum, but I feel there is some sort of a consolidation, positive to sideways kind of move expected over here, and the stock could move up to 88 zones as of now immediately.
Okay, all right. Next up, I want to bring up Axis Bank. Sushant is writing a comment and he wants your advice there on what lies ahead for an Axis Bank. This one has actually been relatively sluggish if we look at the momentum that the market has seen and the banking stocks have seen in the last few weeks. Is that likely to be the trend going forward for Axis as well? Will it be relatively sluggish or underperform potentially?
So, looking at the heavyweight banking counters, some of the names have done quite really well. But Axis, we've seen from the last 3 weeks, it underperformed, and it has started moving after taking support of 840 zones. So currently the stock is, positive. It is trying to move and turning upwards with good amount of open interest addition in the long side. But at the same time, the stock is kind of a range bound move, and we could expect around 888 zones to come. Now we have to understand it is moving below its key moving average. So one has to look out and watch out for this stock before entering.
Okay. Shailaja is writing to us and wants your advice on Adani Power. After making that, 52-week high about 2.5 months ago, the stock has cooled off about 150 rupees odd from those levels. Right now perched at 350, 355. Talk to us about the levels it's trading at. Is it an attractive time to dip in for those who missed out on the rally, or do you foresee some more pain before it bounces back meaningfully?
So Adani, we've seen that, after, mid-August, we've seen quite a lot of cool-off and profit booking in the stock till mid-October. And from then, the stock started moving up and showing some kind of a buying interest. But again, there is a very strong resistance standing at 380 zones, which is difficult to surpass. So, immediately the stock can move up to 370, 372 zones, but 380 would be a resistance from where the stock might sit down.
Okay. Another sector that has very sharply bounced back and seeing very strong demand is the hotel space. In fact, just yesterday on MC Pro, we did a detailed report on Lemon Tree hotels. But that's not what I want to discuss. I want to talk about Indian hotels as well. For those interested in Lemon Tree, can check out that report. But let's talk about Indian hotels. Satya is writing to us and wants a short-term view on how Indian hotels is likely to perform. What do you think, Shivangi?
So, Indian hotels, we've seen from the last 2 weeks, the stock has been in a laggard state and it has not been performing. So, my view over here would be that, we could wait and watch out for these levels. It did take support around 300 zone, so it is quite attractive to buy right now. But again, we have to maintain a strict stop loss and target in mind. So upside, I'm feeling 320 would be a good level which could be seen immediately, and downside we could put a stop at around 305.
Okay, all right. Okay, very quickly then, the last stock that I want to address, this is from Kamalaja. She wants your suggestion on Lux Industries. Now, this one has seen a good recovery from 52-week low, but still continues to be in that, zone where, where it has a lot of room for growth. Do you think now is a good time to enter for those who are interested in investing in the innerwear industry and the demand that it's witnessing, or better to stay clear of this one?
So, looking at this chart structure, it has been in a very consolidated and tight range from the last 25 weeks. So, somewhere the stock is not building up momentum, and even if it is moving, trying to gain buying interest, it is then again, failing to surpass the higher zones and then again sinking down. So, my view on this stock would be that we could stay out of it because it is quite near its support zones, but then again, it is in a very range-bound move.
Okay, all right. Thanks for that. Shivangi, before we let you go, I want to ask what are the stocks that you are keeping on your radar and would perhaps like to highlight for our viewers as well?
Absolutely. So my first stock on radar was, is on the oil and gas space, and we've seen IGL, which has come out of its range of the last 12 sessions. It was consolidating on the daily frame, and it has given a pole and track pattern formation breakout with good amount of volume. So, weekly it was also moving in a very consolidated form, and now it is coming out. So the stock looks quite attractive for 450 levels with a stop of around 424. My second pick would be Cummins India. It has given a consolidation breakout and is sustaining at higher zones. It also formed a bullish candle yesterday with a long lower shadow, indicating that buying can be seen at support zones. So this stock is a buy with a target of 1430 with a stop loss of 1345.
All right, guys. So Cummins and IGL, two stocks being recommended by Shivangi. With that, thank you so much, Shivangi, for joining in and for helping our viewers out with their queries, questions and concerns. And guys, thank you for tuning in. We'll be back again tomorrow with a fresh edition of Morning Trade. That's it for now. Thank you for watching.